So, what companies will we be speaking of today? Let's get you across the first five. Camplify, Alcidion, Aerometrics, Prosper, and HighPages. So all companies that are pretty newly listed. They were startups, they've really seen the rubber hit the road since becoming public. But we do have a stock of the day, and that is Mach7. So the business released its first quarter FY23 update today. It saw sales orders of $3.4 million, down from $17.4 million in the first quarter of FY22. Now, looking ahead, the company, and its ticker code is M7T. It specializes in medical imaging software. It says that it's confident it can achieve FY23 sales of between $36 million, so that would be a 20% increase on FY22 and targeting $30 million. But is this reasonable considering all of the headwinds to companies, particularly in the tech space and particularly those that aren't hitting the mark? Claude, I'd like to get your thoughts to start on Mach7, because it sounds to me as if it looks like they're talking about weighting their results to the next half. I mean, is that sort of a red flag?
I would say it's maybe an orange flag, a little bit of a red flag. It's quite common and often it doesn't come to pass. I should disclose here, I have a very small shareholding in this company. I recently dipped my toe in after watching for many years, as it has had some, share price pressure. And look, the reality of the situation is that in the fourth quarter last year, they had very strong, their best ever positive operating cash flow. And as often happens, that is partly to do with the fact that they have, managed to get payment for a bunch of stuff, perhaps that they could have otherwise got in the first quarter. So as a result, you see, not just in this year, but in years gone by, Mach7 has had a weaker first quarter. Having said that, even compared to the past, I do think that you have to admit that this was a weaker quarter than one that I would have hoped for. Having said that, one of the problems with Mach7's business model is it is more based around lumpy sales, and they do have this recurring revenue figure they talk about, but that's not like a pure subscription-based recurring revenue. That's a combination of different kinds of revenue, including like maintenance revenue that they consider recurring in nature. And so I don't really have any problem with them reporting that, but this is a company that we ultimately have to judge on its profits. And the reason it's kind of interesting is because you could imagine on its current trajectory, it actually becoming profitable in the next couple of years. And so that's why I'm keeping an eye on it. But having said that, even before today, this was less than a 1% position for me. So very much, I haven't really changed my view based on what I consider to be 1 weak quarter. So still watching this one, still interested, still own some shares, still like it. But just caution, still super high risk. That's what I do. Like, I can be quite defensive in the way I have my overall portfolio, like a lot of cash. But also when I do invest, I'm sometimes taking high risk stuff like this.
Okay, so that's a hold because you're holding it.
It'd be a hold to a buy. Like, if I hadn't already bought some, I'd probably have a little bit today. But
okay, how much cash are you holding now, Claude? A lot?
Well, it's hard to say just because so I have more liquid cash. I have for a long time had more liquid cash versus my portfolio for pretty much all of this year. And yeah, just basically I'm starting to think about maybe starting to deploy some, but I'm still quite on the side, but I don't want to miss the opportunity to actually put some cash to work, because during the COVID crisis, it bounced so quickly that it was April, I basically missed deploying in the good period and sort of had to follow as the bounce was happening.
Mm-hmm. Okay. Thank you. Thank you for indulging me as well. I know sometimes I put you on the spot. So Luke, your turn. What about Mach7? Buy, hold, sell. Do you like the business? Do you own it?
I don't own it like Claude. I've watched it for a while, and I tend to agree with his sort of conclusion at the end there, where I probably wouldn't put too much weight on 1 week quarter. And look, it was the cash outflow of about 5 mil. That's a poor result. But cash flow is lumpy in this business. As Claude said, it's not a smooth revenue business where they have monthly subscriptions to a software product. It's very much that sort of lumpy contracts and licenses. And so The cash result I can sort of forgive. The weakness at the sales level, where they only signed, I think, $3.4 million worth of new sales for the quarter. It was actually their weakest quarter in about 2 years. So that's probably where I have more concern. They've stuck to their guns, as you said in the intro, Nadine, with a 36 mil sort of full year target. So they're confident that 1 week quarter, and maybe they've got good visibility of their pipeline and sort of what they can see moving forward. But look, for me, I've had it on my watch list for a while. There's a genuine business here. Their product has won some awards. They've got, a decent slug of revenue. As Claude sort of said before, they're right around that break even at a profit and cash flow level. So that inflection point always has me interested with any business, let alone something in such an attractive space like healthcare tech. Just with this quarter, I'm just keeping it on my watch list for now. If that share price certainly came off a bit further, maybe into the low 40s, I'd definitely take a real closer look just on that value. But on the outlook of the business, I don't hold one bad quarter against them, but I just sit on the sidelines and wait to see that sort of recovery come through that management are confident will happen.
Okay, so that is a not yet for Mach7 from Luke. Okay, guys, let's get to these. Go ahead.
Can I just add one thing? I just think Luke made a really good point, and the problem now is this also does create that situation where if they then do miss in the next quarter, for example, that isn't now just one bad quarter. That is actually starting to go against management credibility. So that's the real risk there. I think it's become higher risk as a result of this weak quarter.